Inflation, rotation, buy a business or buy a stock? This video was inspired by this question that just came in here from John Major, former Prime Minister of the United Kingdom. Only joking. You never know, it might be. If cream rises to the top, why not go heavier on the Mag 7? Let me explain that. We've just had the PCI. We've just following CPI and all the rest of it. Or was that the other way around? Forgot now. Anyway, we just covered the inflation numbers, and we're going to talk about inflation rotation, buy a business or buy a stock. One of my members just suggested, in fact, there's another option, just don't play. Watch to the end of this video. I'll give you the link for this, the follow-up to this video, and we can discuss, should you just sit out and not do anything? And now on with the rest of the video. During the making of this video, I also had another question. Someone saying, hey, hang on a minute. What if I sell a stock and I sell it? Will I pay taxes if I leave it in my brokerage account? Well, I've done a full video explaining that. Make sure you go and watch that. It's part of a 3-part series. There are 3 videos. Each of these I'll put at the end of the video. And now on with this video. Well, we've seen over the last few weeks people rotating. You've heard about rotating. Normally is 10 to 14 days cycle when people exit one segment and go into another. And we've seen, because we now believe that interest rates are coming down, people are going, hang on a minute, there's more money to be made in the Russell, which is the low caps, the small caps, the tiny companies, many companies that aren't that successful, remember, taking lots of debt and all the rest of it, not a risk. Those stocks haven't done very well for a while. They've not done well for a reason. There's been high inflation. There's been high interest rates. They've been struggling, but they may have been struggling because they're not great businesses. However, people are dumping great businesses and buying the cheaper businesses because they expect greater growth. Is that a great idea? Well, let me answer that. Over the last couple of days, I've been buying more and more and more of the S&P. The S&P has served as a benchmark now for many, many years. In fact, we can go back thousands of years since the beginning of time when people traded coins on the street in biblical times, and the economy has grown and businesses have grown. The S&P was based upon solid principles over time. Of course, it changes its nature, the way you buy into it, whether you buy the VU or the SPY or other ways, but the general economy has been the same on the basis of the S&P for many, many years. Goes back a long, long time. And in fact, since the beginning of time, markets have always gone higher with dips in between. The S&P has gone through world wars, depressions, recessions, you name it. It's been there and come out higher on the other side. So the principles of owning good businesses has always been and always will be a good idea. If you ask me today, if I had real cash in my hand rather than an app in my hand, and all I'd had to do was press a button, it didn't feel like real money. I actually had cash in my hand, and I had 10 people outside knocking on my front door saying, invest in me. And I had a great business with a great balance sheet, with great CEOs, with great history, with great management, great skills, potential, proprietary, unique services. Would I give them my money? Probably would. Then somebody else knocks on the door, says, I haven't really got any money. I've got a good idea, but I'm struggling at the moment. I've got lots of debt, but hey, I could be really great in the future. Would you give me some money? Well, if you got, what's your management like? What's your understanding of the markets? Whatever. The list goes on and on. Would you give them your money? You probably wouldn't. Would you? Because it'd be real cash. However, on your app, on your phone, on your Robinhood, press a button and off you go. So what's happened now, we've had rotation out of mega caps into the Russell, and what we've got now is the Russell growing, but today we've got rotation coming back, and there's lots of information to say that now Google, and I did a Google video last night, click above my head down below in the description, go and check out my Google video. It's now really, really undervalued by my reckoning anyway, and I did my own calculations on that. Great businesses have been trimmed off. Have they been trimmed off too much? So to answer this question here, does the cream rise to the top? I believe it does. Do you want to own stocks or do you want to own great businesses? Now, some of you will say, yeah, but we've had the best run for the mega caps and they're all going to slow down now. I can make more money by buying the small caps on the Russell. Yeah, you can. Absolutely, you can. Over the last couple of weeks, you've made some money. It's rallied mega on certain companies that have rallied mega. But remember, there are many of those that are doing well on the S&P 500 as well. It's just being disguised with the drop because the Mag 7 do take up such a high proportion of the index. But it would have been a lot lower if you'd been in the individual stocks. That's the power of the index. So those companies are doing well. The Mag 7 will return, and your portfolio will explode. So right now, you may have moved out of the high tech. You may have moved out of the Nasdaq or individual stocks, or maybe you've sold the S&P and you decided that Russell is the greatest thing to own now. Now, I put this to you. You've gone from owning a great business, a great index over time and over history that's beaten the benchmarks of the best traders and hedge funders in the world for years and years and years and years and years, as long back as we can remember. And you've gone into companies that are really struggling. Now, interest rates will come down. It will help them. But if you've got a rubbish business, you've got a rubbish business. Borrowing money doesn't necessarily help you. I don't borrow money to promote my business. I just work and reinvest my money. Yes, I'm using margin. That is borrowing money, but that's a very, very different thing. I've not spent the money. The money is still there, if you like. All right. You don't need to borrow money to promote your business. You just work hard. So in my opinion, from my experience of building businesses, and I've done it all around the world, my experience is rubbish businesses, whether rates are high or not. Now consider this, you've just bought the Russell and you've made yourself 7%, maybe 14%, whatever, but it's a very short-term gain. Most of you have probably done it in your brokerage account because your IRA's maxed out, you can't use tax-free savings, and you've sold it, you've paid a 20% tax. Okay, so the money you've made wasn't quite as good as you thought it was because you've just paid tax. Now what you have to do at some point, you will sell. No doubt about it, and the exit will be dramatic on those stocks. At some point, you will sell and you'll want to own the great businesses once again. You don't know when that moment's going to come, but all of a sudden, people are going to dump the stocks and it's going to go down really, really quickly. But it won't affect me because I own the S&P, and it won't affect the big businesses because the money will go back to them. However, the problem is when you decide to buy back, by now the price has gone up. So remember, the money you made originally, you haven't got as much as you think you have. Right now you think you have because your money's in your account and you go and look at me with my 14%. End of the year, when you get your tax bill, you've got to pay tax on those short-term capital gains of 20%. Now what you're looking at, let's say you've made a certain amount of money and you've paid the tax, you have to now get a discount on the mega caps when you come back, greater than the tax that you're going to pay. Otherwise, you might as well have stayed where you were. You're back where you were. In fact, worse, because now the mega caps have gone up. So it's very, very easy to think, look at me, I'm winning today. I've sold all my stocks and I've gone from here and I've gone to there. Just because you can trade doesn't mean you should trade. Remember, the institutions, the system, Wall Street, your brokerage makes money every time you trade, even if it's Robinhood, where apparently you trade for free. You do trade for free, kind of. The market makers always make a bit of money. You're paying slightly more for the stock than it would be by buying direct, and that's how how market makers make money in bulk of trading for Robinhood and brokerages that offer free trading. So remember, at the end of the day, it's designed for the system to work. That's how the banks make money. If you go into the bank, you couldn't draw your money out because only 10% of the money sits there. It's all been lent out 10 times. If everybody asked for their money back, they wouldn't get it, right? Doesn't exist. Well, Wall Street, the brokerages are all the same. It's a system that works, and just bear that in mind. So if you have moved out of great stocks, bought the lower companies, when you sell, you think you've made some money. End of the year, make sure you've got the money to pay the tax. And now you have to find a way back in to your original position, less than the tax that you're going to pay. Otherwise, you end up back where you were. But you forget all of these things because you do one trade at a time. I've always said, play chess, not checkers. If you're moving one piece and one move at a time, you keep thinking you're doing a great thing. Look at me. I just sold, took a profit. Look at me. I've just bought the Russell. I'm selling. I'm taking a profit. But what happens next? You paid tax on those 2 trades, and now you have to find an entry point lower than the discount that you've got from the tax that you've paid on those 2 trades. Make sense? I hope it makes sense. So what have I done? I haven't sold a damn thing. In fact, I bought more. I'm certainly not selling Amazon, Microsoft, Google, Tesla to buy a few startups on the Russell. That makes no sense. Makes no sense. So I stayed where I am and I put my money where my mouth is. I don't think many people right now would be doing this, but I've done it. There's my margin, the highest margin ever, 52,572, all in. That has benefited me though slightly because I've now moved into a lower interest rate. If I show you interest rates, view rates, you will see I've now moved down to the lower tier. Let me just refresh that. I was at 6.75. I'm now at 6.55 on my total balance. So I've just saved 0.25%. That's very, very nice. Thank you very much. Because guess what? Rates are about to come down and that will probably drop to somewhere like 6. Now, if I'm making 13% a year on the S&P and it's costing me 6, obviously, I'm up by 7%. Makes sense. And I've not had to pay any tax, sell anything. I've got no tax events, and I'm exactly where I started. I've never moved. And the benefit of that is when the rotation rotates back in again, of course, the money is going to start piling up. Hence why you can see today, if I look at my Roth IRA where there's no margin, the S&P is up 0.81. I'm all in on the S&P. But my main account is up 1.37. Yep, I'm beating the market again because I believe to own a great business is by far the best thing to do than owning a stock. Just because you can trade doesn't mean you should trade. This is a game of patience. This is a game of chess, not checkers. I hope you enjoyed the video. I hope you watched it to the end. I hope that makes a lot of sense. It does to me. Maybe it doesn't to anybody else. Maybe it's just me. I don't know. I'll leave you with this final thought. When people say that Warren Buffett is the greatest trader and investor of all time, he's not. He just did the right things for the longest time. When he was younger, he made lots of mistakes, traded bad stocks all the time. I thought he was an oracle. I thought he could see things. No, he's a human being, just like you. He doesn't know what stocks are going up, what stocks are going down. However, by the age of 60, that's when the majority of his money was made. And since then, and now, the real money has been made for Warren Buffett because when he got older, he started to buy the S&P, Coca-Cola, certain land things, and he's just held them for the longest time. He's not the greatest trader. He's just one of the oldest who's never sold and never gone anywhere. If I live to the age of 200, I'll be the greatest investor in the history of the world as well. Because every few years, my S&P will double, and after a while, I'll be a billionaire just by living to the age of 200. So there you go. Are you buying stocks or are you buying businesses? Did you rotate? Are you in? Are you out? Leave me your thoughts. Click above my head for all the links. I've just done a video on Google, why I think Google is great value right now. I've also just done a video, a click above my head down there and down in the description. I've also done another video on should you sell the whole market, a deep dive onto all of that, so all the psychology of investing and other things. So click all the links around my head over here. I'll put those videos as well. Go and check it out. Have a great day. Till next time, take care of yourselves and each other.